Now speaking, Lynn Tyson, Executive Director, Investor Relations. Thank you for joining Ford Motor Company's second quarter 2023 earnings call. Our discussion today includes forward-looking statements about our expectations, and actual results may differ from those stated. Joining us for the call are Jim Farley, President and CEO, John Lawler, Chief Financial Officer, Marion Harris, CEO of Ford Credit, and Ted Cannis, CEO of Ford Pro. We have provided a deck with earnings materials and other important content at shareholder.ford.com. This quarter, we have seen strong performance in our core business, with EPS up 8% and free cash flow up 11%. We have also made progress on our new initiatives, such as green financing and the launch of Ford Pro. We look forward to continuing to drive growth and value for our shareholders. Now speaking, Jim Farley, President and Chief Executive Officer. We are going to have a lot more. So, in summary, we are executing on our Ford Plus plan. We are making progress on the fundamentals of our business, and we are confident in our long-term vision for Ford. We are seeing strong growth, strong earnings, cash flow, and progress on the fundamentals of our business, including software. We are very bullish on the potential for Ford Pro, which had an outstanding quarter. We are taking advantage of fresh, appealing products to generate healthy revenues, healthy share, and profits, while Model E continues to scale with popular, first-generation electric vehicles. We are moving quickly to establish our EV nameplates in the unique segments, not like others, the Lightning, the Mach-E, the e-Trans. We are now offering Mach-E with LFP technology for sale in the US. We are targeting to reach 600,000 annual production units of EVs by next year. We are quadrupling our hybrid sales in the next 5 years. We are moving to a new retail model for Model E, way ahead of our competition. We are nimble and can adapt to the market fluctuations real time. We are optimizing for the long-term value creation. We are seeing strong growth, strong earnings, cash flow, and progress on the fundamentals of our business, including software. Ford is executing on its Ford Plus plan and is confident in its long-term vision. Ford Pro had an outstanding quarter, generating healthy revenues, healthy share, and profits. Ford is establishing its EV nameplates in unique segments, such as the Lightning, the Mach-E, and the e-Trans. Ford is offering Mach-E with LFP technology for sale in the US and is targeting to reach 600,000 annual production units of EVs by next year. Ford is quadrupling its hybrid sales in the next 5 years and is moving to a new retail model for Model E. Ford is nimble and can adapt to the market fluctuations real time, optimizing for long-term value creation. Now speaking, John Lawler, Chief Financial Officer. In this quarter, Ford delivered an 8% increase in wholesale, adjusted EBIT of $3.8 billion and an 8.4% adjusted EBIT margin. Ford also delivered $2.9 billion of adjusted free cash flow, underscoring the improved performance generated from its industrial footprint. Ford Blue delivered $2.3 billion in EBIT with a margin of over 9%, despite a modest year-over-year decline due to a one-time insurance settlement. Mach-E revenue increased 39% year-over-year and more than doubled, but contribution margin and EBIT margin were both negative due to pricing and volume pressures. Ford Pro's results continue to accelerate, with revenue increasing 28% and EBIT more than doubling to $2.4 million. Ford Credit generated EBT of $309 million, in line with expectations but down $550 million from a year ago. Ford now expects full-year total company adjusted EBIT of $11 billion to $12 billion, adjusted free cash flow of $6.5 billion to $7 billion, and capital expenditures between $8 billion and $9 billion. Ford Blue is expected to deliver full-year EBIT of about $8 billion, while Mach-E is expected to report an EBIT loss of around $4.5 billion. Ford Pro's EBIT is anticipated to approach $8 billion, and Ford Credit EBT is anticipated to be about $1.3 billion. Morgan Stanley analyst Adam Jonas inquired, Jim, given the losses in Model E, what strategies are you considering to remain relevant in EVs while also being more capital disciplined? Jim Farley replied, Adam, when Doug joined us and we looked at the BYD and Chang'an platforms in Texas, we realized that our traditional competitors had already made their bets in the EV space. This was a major eye-opening moment for us, and we quickly changed our approach to platforms. We saw that our competitors' battery packs, gearboxes, motors, braking systems, wiring systems, and battery chemistries were uncompetitive. We knew we had to make a shift to be competitive, so we invested in a simpler, more energy-efficient platform and an advanced electrical architecture to win the war of shipping software to the vehicle. We also learned about battery scaling and how to build high-quality batteries in large quantities. We're confident in our strategy, including in China, where we can leverage our local JV partners' platforms for certain segments. Wolf Research analyst Rod Lache inquired, what investments are necessary to reach the 2026 EV targets, and what is the 8% margin target you are committed to? John Lawler replied, Rod, we remain committed to our 8% run rate goal for 2026. We have several years to work towards that goal, and we have the flexibility to adjust our approach as needed. We can adjust our spending, timing of transitioning from components to electrical components, and focus on the second generation of products. Our team is working hard to ensure that the pricing is right and that we are able to meet our goal. Jim Farley replied, Rod, the elasticity model we built this year has been quite revealing. We filed around 120,000 EV and have gained a better understanding of the relationship between price and volume. Surprisingly, it's not as different from ICE as we initially thought. This data, combined with the 8% levers John discussed, has enabled us to optimize our profits through volume trade-off. Credit Suisse analyst Dan Levy inquired. Dan Levy with Barclays. Could you please explain your plan to quadruple the number of hybrids and how it fits into your push to decarbonize? What is the flexibility in this plan and how do hybrids factor in? Is the push on hybrids incremental, or was it always part of the plan? How are you comparing hybrids to EVs? Jim Farley replied, Great question. We've seen a shift in the industry from an extreme hybrid and EV focus to an understanding that there are many degrees of electrification between the two. Customers are making rational decisions based on their needs, and we've seen a surprising increase in the popularity of hybrid systems for F-150, now at 10% mixed cost and growing. We've found that customers respond well when we combine hybrid efficiency with new capabilities like Pro Power Forward. We never expected to reach a 50% hybrid mix for Maverick, but it's happened. We're listening to the market and want to ensure ICE customers don't feel left behind. We have multi-energy platforms that allow us to offer a range of electrification options, from full to partial. So, you'll see more hybrid systems from us, but they won't be traditional hybrids like Escape or Prius. They'll come in different forms, and customers seem to like that. Credit Suisse analyst Dan Levy inquired, Can you provide more details on the flexibility of the plan and how it responds to market feedback? Are there any capital deployment strategies you can use to further develop your EV program? Jim Farley replied, Our strategy is to make 8% margin regardless of the price point. We're allocating capital to ensure that our electric and hybrid vehicles stand on their own in the segment report, and we're not creating greenhouse gas credits between our businesses. We're done with that. We're focused on efficiency and simplicity, and leveraging software revenue and profits with great margins. We won't be building compliance sets with low-cost vehicles, but instead we'll be making sure we can make 8% margin. Bank of America Merrill Lynch analyst John Murphy inquired, Jim, are you referring to plug-in hybrids or hybrids that qualify for the $7,500 IRA credit? Jim Farley replied, Yes, I want to make it clear that the term hybrid in our industry refers to a motor that powers batteries. This could be a serial hybrid, like the F-150 hybrid, or a traditional hybrid without a plug. J.P. Morgan Chase & Company analyst Ryan Brinkman inquired, What factors give you confidence in the 8% EV target for 2026? Is it related to market participants being sorted out, or more to do with vertical integration and other levers you have identified? John Lawler replied, Ryan, our plan hasn't changed. We've seen a higher adoption rate of EVs than we anticipated, and the price premium has decreased more quickly than expected. This is impacting our profitability in the short term. However, we remain confident in our ability to reach our 8% target with the second generation of vehicles. We are continuing to adjust the levers to get there. Jim Farley replied, The U.S. auto market is currently experiencing a 7 to 8% decrease in sales, while the intention to purchase is still 30 to 50%. Consumers are willing to buy, but the price they are willing to pay is inconsistent across segments. Ford has been able to leverage its knowledge of certain segments to create second-generation products that are cost-effective and complex. We have seen success with our software subscriptions, with nearly 500,000 subscribers. Our strategy of competing in certain segments will differentiate Ford and help us to reduce costs and increase sales. John Lawler replied, We are carefully monitoring our customer acquisition costs and retention rates to ensure that the present value of our customers is positive. We have established thresholds for when we will and will not acquire customers, and we are confident that our investments in the future will be beneficial. Jefferies analyst Philippe Houchois inquired, Can you please explain the strategic shift in BEV and how it has impacted the company's losses in Pro? John Lawler replied, I understand the math and the large number associated with it. However, we must consider the investments we are making to ramp up capacity and put the necessary infrastructure in place for EVs. We have added a significant amount of capacity to make this work. We must break down the contribution margin, gross profit, and investments for the future to scale and grow this business. Additionally, we are investing in our second and third generation vehicles, which adds to the cost. Therefore, attaching all of these costs solely to the vehicles is not the most accurate way to think about it. Jim Farley replied, in response to the question about the lighting price decrease, I want to be clear that we built 24,000 electric vehicles in the first quarter. Our target for the fourth quarter is 4 times that amount. We ramped up F-150 production in September to meet this goal. The order bank for this production rate is significantly different than the original F150 Lightning order bank. This is important strategically because we have a second cycle product coming and it will be profitable. We did not reduce the F150 price to create an order bank for our current production rate, but rather to triple it. Additionally, the F150 price after the $10,000 decline is still higher than its launch price. Exane BNP Paribas analyst Jim Picariello inquired, what are the key drivers of the $2 billion step down in guidance for Blue for the year? What should we be considering for Blue volumes, pricing and other factors in the second half? John Lawler replied, thanks for the question. Blue's pricing held up better than expected in the second quarter, but we anticipate some pricing pressure in the second half as we increase volumes. We also have a new contract ratification in the fourth quarter, which will be taken as a full charge in that quarter. Additionally, we're seeing inflationary pressures, particularly in warranty costs and freight costs. These are the puts and takes for Blue as we look at the half-over-half comparison.